Ticket changes.
Hello, traders. Welcome to the Monday stream, the first day of the month. Immediate price action, a new month, new price. There it is, right? Bitcoin down 3.85%, but it was down at about 5% at the lows today, 27,682. And I mean, you know, it's disappointing anytime Bitcoin falls below 28,800 because we know that level so well. And that level is 2021. Couple swing lows, January and June. Below that, a lot of straight up and down and up and down and up. So that's what the concerning part is. What's up, the NYs or the NYs? Thank you for the $5 super chat. Start the stream. Much love. First of the month, so first best day of the month to join the Patreon, where you get trade setups, education, Discord exclusivity, but above all, you are supporting this 100% crowdsourced stream, and not just me, but also the team. So yeah, patreon.com/MitchRayTA. Maybe I should just pin that one. Okay, yeah. So we do have new people that have joined. Remember, it's the first of the month, so it's very seldom talk about this stuff unless it's like, you know, the first or second or third or something. So real quick, before we get into it, and to the people that support this community, Brad, where'd it go, man? You had it there and it's gone now? What happened? See if you repost it. I guess we'll get into that in a minute. So yeah, I mean, below 28.8 and the lower high here, you know, not great, but at the same time, you haven't even taken out the low from the 22nd. So until that happens, I mean, like, it's nothing almost. But yeah, as the regional banks sold off today, so did Bitcoin. Bitcoin actually front ran everything. I mean, Bitcoin started selling off when the stream ended last night. I mean, maybe an hour or two after, maybe not even 2 hours. And so, but then it didn't even see its lows till a power hour for the stock market. And we're gonna take a look at some of these regional banks because, you know, FRC's done, seized by the FDIC and then sold for pennies on the dollar, $10.6 billion to Jamie Dimon, JPM, JP Morgan. And so it's like, who's next? And I'm thinking like PACW. But there are some other ones that are brutal, man. And they're like lesser thans. They're not even on a watch list. So we're down like 20% today. So yeah, so we could spend some time, a little time on the crypto market, you know, just looking at it. We'll scale out, look at the weekly on Bitcoin. Nothing's happened. I mean, that's the thing. Like when you like, okay, daily, oh no, 4 hour, oh, we're screwed. 60 minute, oh, just might as well go to zero, right? But then you go to the weekly on Bitcoin, it's like, yeah, you're not above 28.8, but you're the same price you were at in March, mid-March, right now. You're at the like that highest high where everyone was freaking out and was so happy. We're at the same price. It's just, you know, 6 weeks later. So I wouldn't consider that a loss. Still the 23% retrace, the shallowest retrace. So you might react here. If there is a pullback, I bet it's a higher low than 20K. And the eventual targets, 36 to 48,000, just based on Fibonacci common retraces. There's no set time on when it's gonna get there. So it's like, you know, Bitcoin's gonna go up and down every single day. Well, I mean, maybe not in the past 6 weeks. That's barely up and down right on the weekly. But again, like eventually these are the targets. So after such a stupendous run, I mean, maybe you pull back again. But I'm just thinking, wow, fundamentally, you hear me, banks are failing. 2 of the 3 largest banks of the failures, right? Of all the bank failures that have ever existed, 2 of the 3 happened in the past 6 weeks. One was today and Friday, this weekend, and then one was last month, was in March. SBV. And those 2 are like, you combine all the bank failures that have happened this year, it is like more money than like all the bank failures of 2008, like more money. Adjusted for inflation, of course. So, I mean, that's Bitcoin. I mean, hey, you know, all kinds of bad things could be happening when you got talking about bank failures and central bank digital currencies coming in. This is the asset. This is what it was built for. Years ago, 2008. All right, so whatever. Weekly, no big deal. My God. But yeah, I cause for concern on the daily because of a lower high and a kind of up thrust, back test of up thrust of 28.8. You never know what that could manifest into, like how significant that is right now. So far, you're fine until you're breaking 26,750. That's it. Like this thing could pivot to tomorrow and just engulf it until you're making a lower low. Yeah, the lower high, dang. That could set the tone for the lower low soon. But until then, you're kind of okay on Bitcoin. Wow. All right, Ethereum down 2%. Interestingly enough, I know it doesn't look good or whatever. I mean, again, like an up thrust, back test of up thrust almost. And trying to break this heart line of the channel here, and that could be a long way down to like 1560, and you'd still be uptrending. And then you still got 1730 that you could back test and hold. You're definitely in no man's land right now. Like this is probably the longest, you know, between March and now, this is the longest period of time spent within these 2 levels. Look at every other time in history, you spend about a day or 2 going straight up or down. And now it's finally not doing that. Like that's, the price is finally correlating like, oh, just chopping around. Okay. So really, I mean, yeah, it's unfortunate, maybe lower high and breaking the heart line. And yeah, there could be some downside here, but the good news is like, same thing with Bitcoin, looking at the weekly, you know, you're just, it'll pull, if it pulls back, gonna be a higher low most likely, and you'll probably see a 382 to 618. Just, I mean, barring acts of just, I don't even know. Like, well, it would require the VIX to go to 100 for us to not see 2400 eventually. And that means some serious stuff's going on. Circuit breakers going off. I mean, that's the way, like, but I think they've tamed that. They figured out how to tame the VIX to prevent the circuit breakers and the massive COVID crash drawdowns, right? So yeah, I mean, that's unfortunate. It wasn't quite a bearish engulfing candle. That was a big reversal candle. Indecision last week and this week starting to sell off a little bit. So yeah, there could be some downside after a run to test a key $2,000. We've always known that's a major inflection point. It wasn't going to be easy. We knew there'd be supply there. There's clearly supply there and not enough demand to break that, to absorb that supply completely, to run to the next levels. That's what you got to do. Buyers have to absorb supply at $2,000, and they haven't done that. There's too much still. Okay, I mean, you know, whatever. Not much of a change besides a little pullback. And you know, Bitcoin down, it was down 5%, and Ethereum was down 2%. What's going on? Well, think about Bitcoin dominance up against that major resistance. Okay, no one said it was guaranteed that this time Bitcoin dominance has to break the top of the trading range. It's not breaking it right now. Spending some time because there could just be supply there, which is what makes sense, you know. Okay, BNB that was, man, so close, and then can't do it, but still, it's hilarious. The performance is so good. The engulfing candle from yesterday is still valid because, right, how do you invalidate a bullish engulfing candle? You get a candle close below the open of the candle, and so until then, it's fine. It's crazy. You're just butting up against the resistance. This, you know, we never act like we know if a level's going to break or not. It sure looks strong, doesn't it? I mean, how many times do buyers have to test this level? And then the sell-off occurs, and then more market participants than before come in to buy, to push the price right back up to that same sell wall. And of course, this could be like the lowest risk entry you could ever dream of for a short. But it's been like that. February 5th, March 16th, April 18th, 27th. Those are all like, and even here, I mean, November 6th, good luck on that one. But those are like the lowest risk areas for shorts just because it's the top of a trading range. And the bottom of the range is like 225. So, I mean, like, that means something really bad would have to happen. I mean, a major pullback on Bitcoin. Bitcoin going to 20K or 23K would take you down to much lower levels. But that's where we are. Bearish divergence still hasn't really been able to take off yet. So you just got to make your choice. Do you want to take a not so strategic long that is high risk based on the fact of what we know about the level and how much downside there is below the level and you're not broken out? Okay, that's one way one could play this, or one could go short and have a stop loss above 350, because above 350 means it's going to 430 real fast. And that's where you're like, I'm out. I want nothing to do with this. The whole argument for going short's gone, right? Because it's the same thing about like going, and yeah, I would be really careful, man. I don't know. You look at something like this, and you're like, do you really think this doesn't really look good? Looks like a lot of distribution going on, accumulation, because it's the inverse chart. And you're just testing it, and there's just not much demand. Not many bids are coming in. Exactly. But at the same time, just because it looks good doesn't mean it still isn't like the lower risk area for the short. That's the way you have to look at it. Seems bullish since February, continuously testing and weakening resistance, but it's technically low risk for the short because you're always trying to sell high, buy low. Just fundamentally. Okay, anyway, spending time on that, it's like whatever. XRP down 1%, whatever, no big deal, man. I mean, nothing's changed. You know what it is. This is the Titanic lady chart. What? Did something change? Nope. If you look at the weekly, I mean, just same price as last week, the week before, same price as it was at some point in March, same price in October 2022, same price it was at in February 2021, May 2019, same price it was at in April 2018. I mean, right, just sideways, man. But still fine, outperforming Bitcoin today. And since those are the big four, let's look at Bitcoin dominance. Which, yeah, not every day Bitcoin dominance can be, and this is like almost nothing. It's barely even done, this is the weekly, okay. Yeah, weekly, no breakout yet. How crazy is that? Not really. I mean, I'm talking about like that high of the automatic rally, right? The May of 2021 resistance, and then tested in July 2021, and then really tested again in June. And you're right at it, but no breakout yet. So close, man. God, this is as close as you could ever get. Look at that. You know, is it an up thrust? Back test of up thrust? It's pretty perfect. Look at the test, man. Bearish and golden candle confirmed in 31 minutes. Okay. So it's the same thing like you're thinking about like with BNB, where, okay, Wyckoff accumulation schematic, very real. Oh, it's just textbook, man. It's a work of art, you know. But this is so high. This is the highest level you could ever achieve within a trading range. Therefore, for a fresh long, it's the highest risk ever. Right? This would be considered buying high, you know, going short. And again, this is Bitcoin dominance, and I'm speaking in terms of like a normal asset. This is not like something one's buying and selling per se. So it's just the same thing where we know we're at the end of Wyckoff accumulation, 700 days contained within the structure, and we know eventually probably a breakout if we've assessed it properly, which I think we have, because we've got the spring and back test, and like, hey, if this is real, then we're going to the top of the range, and we've done it. So you just don't know how long absorption is going to take up here. And so being at the top of a trading range on Bitcoin dominance chart, you'd think, oh, maybe the altcoins might perform better if buyers can't break this level because of the sell-off. Okay, yeah. Can y'all hear me? Is this stream on? Make sure I haven't even looked at chat. Sorry. I've been running around. I'm a contractor here doing things all day. I've been really trying to juggle the charts, the markets, and that. Sound is okay. All right. What's up, Coffee and J-Togs? Echo, 10 pence, Tails, so dude. What's up, Eric, man? Yeah, 84 years indeed. Oh, okay. So, wait, but we already did those. That one's today? Oh, okay. Really? Crazy? Today we had multiple people resub in the Citadel, the premium Discord membership, which Big Cat, OXD, EC, thank you, and then Mike Lovin, all. So we have Big Cat, thanks for the 4 months. OXD, thank you for the 5 months, man. And then Mike Lovin, thank you for the 4 months of support of this community. Because you're not just supporting me, you're supporting just everything, like what this community stands for. Because you want it to keep going. You want it to exist tomorrow. So that's what you do with things you want to exist tomorrow. You support them. So, okay. Thank y'all. And for all the patrons and Citadel members that have resubbed overnight, you know, if you're on the Patreon, thank you so much. I really appreciate it. Couldn't do it without you. Y'all are amazing. So just one big Jesus jumps for all of y'all. Very grateful. And so is the team. Okay, so that's your crypto, man. Let's go to FRC. The last day of trading in its history was Friday, but let's just look at it one more time. You know, it's crazy. This morning, and I was looking at it, and it was pre-market, and the asset, it was down to 190. So at pre-market, before the actual occurrence of the seizure and maybe JP Morgan actually buying it for 10.6 billion, we're talking this thing was down like 45 to 50% pre-market. It was going to zero, man. It was done, and now it's off. It's done. It's never going to trade again. But wow, okay. And yeah, so like banks, man, it's just something you want to keep your eye on because it is the season, right? I mean, if it was 2000, we'd be looking at tech stocks, right? Oh my God, the tech stocks are looking terrible, man. The bubble's popping. Oh God. Well, now it's 08. You know, if I was not in college I was streaming, we'd be looking at all these freaking bank stocks like we are now because it was kind of the centerpiece of the crises, whatever. Look at something like Key Corp. I mean, this is brutal. This is just disgusting, right? Down 4.8% today at the basement. Remember, all these wicks that you're going to see on these bank stocks, the Federal Reserve, remember they offloaded $1 trillion, pretty much $1 trillion off the balance sheet last year. First time in history, it was a negative M2 money supply. And within 2 weeks, half of it undone. And all that happened on these bank stocks was not even a dead cat bounce. It's a 35% rally, percentage retrace from the high to low. Pathetic. Are you kidding me? Dead cat bounces, chat, after crashes and scrub automatic rallies, reflexive rallies, about 50 to 61% before drawing down further. And this asset, what did it do? Hit a 23 to 25% retrace. And it's just starting to roll over again. I mean, things are breaking. Clearly, we're seeing it. I know everyone jokes about, hey, the Fed keeps raising interest rates. They're going to break something. We're looking at it. We're watching the whole regional bank sector break. So $500 billion just to get the asset to rally, 23% off its high from beginning of February to the mid-March low. That's scary stuff, man. Hyper bearish would be a 236 reversal. And that's where Bitcoin is on the weekly, from its all-time high to its November low. It's at a 236 right now. So it's like, man, it's got to probably be going to at least the 382 or the 618 eventually. Bad stuff, man. Okay, USB down almost 4%, down 0.24% after hours. Man, like really selling after hours. I mean, just again, last week saw your lowest level since 2020 and just starting to roll over again almost immediately. PNC, which is like too big to fail, right? Isn't PNC too big to... Look at this crap, man. Just, right, engulfed on Friday. Oh, everything's good. Highest daily candle close on PNC on Friday since March 21st. We're going to... And gap down and then just sold off all day. And that level, that 116 hasn't even been tested yet. You know that's going to get tested soon. 115, 116. Huge bank. Okay, then you go to something like Regions, which is like, the second largest holding or weighted asset on the KRE, which is the regional banking ETF. This is a ungodly size, right angled, ascending, broadening formation. And what's happened today? You fell below the support, and then buyers got the price on Friday back above the support, and everyone's, oh, we're safe now. I guess it was a false bearish breakdown. Hidden bearish divergence, by the way. And then today, what happened? Back below. You've broken back down. It's a bearish breakdown below the horizontal line support. That's bad. And downside, I mean, I think you could use your imagination here. Minimum $13. That's almost where it went on that crazy mid-March day where the Fed had to inject $500 billion in 2 weeks. That's your target, right back where that was. Okay, we just could keep going. I mean, Schwab wasn't down bad today, but dude, just look at this. And yeah, I know it looks like it closed. Yeah, it closed above 5150, which is important, man. Like if this doesn't hold, you're done. Like you're gonna just collapse. It's this one last level of support, right? Straight up and down and up and down and up. And we get down $38 target if 5150 doesn't hold. It is holding today. Congrats to all the Charles Schwab owners. Wow, you're so smart owning bank stocks right now, financials. But that's where you are. And so Regions is like that. The regional bank, Schwab's like that. They're so close to decimation. So just the regional, let's look at the ETF real quick. Yeah, so if you dropped really hard today, yeah. So got to see how terrible this is. This is the ETF, man. All right, regional banks. Look what happened. Do you see this arrow? You see this yellow 4283 line? Okay, what happened? Sellers pushed the price below this key ice line. And what happened? A 3-day rally ensued for a formal bearish backtest. What was once a resistance a very long time ago has become resistance again with confirmation and now a bearish engulfing candle. What level is this? It's just random, right? No big deal. It's not really a big deal, right? And then you look left and you understand, oh, sweet mother of Jesus, it was that one old all-time high from March 2014, which then became timeless as a level where you can see the type of price action around this area. And below 4283 equals 3687 almost every single time. Like, look at that. Like the price action straight up, straight down almost every time. This is an ETF, man. And hidden bearish divergence. Good God. It's so, yeah. Someone will be like falling wedge. That's why I painted the picture here. Like falling wedge. Okay, it could reverse. It could, man. I'm not saying it couldn't. I'm just telling you right now, as it currently stands, bearish breakdown happened last week of a key level, and the only thing that's happened so far is a back test of that level. So everyone in the world that knows how to read charts, they understand it is confirmed that level is resistance again with the bearish engulfing candle. That's all I'm saying. I'm not calling for 3687. I'm just telling you about price action correlation between 3687 and 4283. So not really good, man. This is bad price action. Now tomorrow we engulf, we get above 4283, we break the supply line at this little, wedge here, whatever, consolidation structure. Okay, that's the new data that exists. It's reality. All right, we'll look at it and we'll reassess. But for now, this is really bad. You know, it's like bearish engulfing candle, and it's like, okay, what's the follow through going to be like tomorrow on this engulfing? Yeah, good question. Whew. Okay, so looking at Pac West Bancorp, which is thought to be the next one. If you look at the chart here, it kind of looks like it, right? Really, really bad. Hidden bearish divergence. Undeniable. Continuation implied. It's already started. What is 943? That's nothing, right? It's no big deal. Yeah, shoot, dude. Just happens to be the ice line from March of 2009, or February 2000. No, it was March. Sorry, March 2009. The absolute bottom of the global financial crisis. March 9th, 2009. Here it was. You just fell below that level today with a candle close confirmation. That's terrible. I mean, besides the crazy day, okay, you know what happened? Wow. I didn't even notice this till right now. But chat, let's get some Jesus chimes in here. This is the lowest daily candle close in history on PAC-W. Let's get some hype in the chat. Traders have never settled up this low until today. Good God, man. So I think your target, if things get bad, it's just going to be $5. It's going to be that wick low. That's it. Remember, if it's at all-time low, it's price discovery. Inverse price discovery. You know, you're discovering prices, just lower prices. And I think, hey, you're setting up for a perfect $5 test again. That's so bad. Think about it. Liquidity injections, money printer go burr. And then it's like, oh, lower high on the 26th from March 21st. It's insane.
Chris in Miami tipped $25. Can we take a look at AG? Looking at higher time frames. Looks like higher lows, higher highs. Thanks.
What's up, Chris? AG at the silver miner. Yeah. Was that Majestic Silver? Yeah. All the miners are like okay. I know like CDE. Some of the miners not having good days today. Gold pulling back. It was started out good and then it pulled back. And that's gonna happen. I mean, think about miners or S coins. And then if you're talking about gold and silver, that's like Bitcoin and Ethereum. They're way more volatile, less liquidity. That's gonna do it. So yeah, that's where we are. But yeah, of course, they're all making higher lows, higher highs. They're just extremely volatile. They're like S coins. Okay, so I'm just telling, be on alert. Put PAC-W, PACW on your watch list and pay attention because this could very well end bad, awful. Okay. What was the other one that was down? Even like 20%. The chart's terrible. Someone hit me up real quick with that one. It was such a lesser than. It's like, you know, it's a question. It's a trivia question. I mean, do any of y'all know? I guess I could work on it, but it's not on my watch. It's like really small. Yeah, Visel. That's it. I think it was VYSL, right? No. That's not it though. This is not the one, but yeah, this is electronics distributor. It looks like a bank, doesn't it? Look where it's headed. Oh my God, man. I don't even know what, it must have split or something for me to have these trend lines here. Yeah, all-time lows. Wow, that's a winner, isn't it? Zion? Is that it? That's not the one, but this is terrible too. Oh my God. Yeah, like here's a level, 2384. You'll probably head down and test that again. That's just to see it from 2015, 2016, 2020, and just recently. So yeah, these are so ugly, man. All right. Let's go to the S&P 500. Okay. Where nothing's changed in terms of super sketched. There is no higher high put in yet. I know it's close. I love how buyers defended 4,058. But you cannot ignore the fact that it has not breached the February 3rd high yet. And these two highs are lower than the August high. You cannot ignore that. So I'm still just not sold on this. It seems really sketchy. This is just, how could this, I don't know. You know, that's just complacency market. Okay. And then energy got kind of hit hard today, right? Worst, it was the loser. Here we go. This is what I'm saying, man. You just crazy 2 days. That's the way I would have painted the monthly if I wanted to induce buying from retail all day. I'd have painted it like that. That's a potential shooting star. And doing what? That is not a higher high. That's a lower high still. This is a valid potential 3 falling peaks. It's chopping around and almost. What happens if we catch follow through tomorrow to the downside? Then all of a sudden locally, it's like you saw in January and February. And it'll be like November and December, where locally on these, they're technically one peak each, right? But locally, confirmation high, and potential confirmation high. So don't rule that out. Hey man, I want it to go to $1 billion. I want it. But let's just keep it tethered to reality. There's enough delusion out there, right? No higher high yet. Deep 886 from the previous side of low.
USDT, please.
What's up, cash out? Yeah, we'll look at Lind. Thank you, dude. Thank you. I don't like it, man. This candle's kind of scary. I mean, it's if you catch fall through tomorrow, it'll be confirmed. I mean, it's a potential shooting star right now. If you catch fall through tomorrow, it's a confirmed shooting star, and it could be your confirmation high locally, which would be very bad. It would be probably, oh, this thing will play out. We'll be going way lower, but you know, everything, the fundamentals are terrible. Everything's bad. You know, highest probability of there's like a recession probability index, and it's like it like highest level since 1981 or something. It's crazy. So I mean, but just because recession doesn't mean the market's going to go down. I'm just saying, like, it's bad market conditions, high interest rates, you know, right? So there's going to be a huge incentive for a lot of market participants out there, including institutions, to be in bonds because it's guaranteed money. Well, assuming. Well, that's another conversation, right? Like, oh, hey, we're at our highest level of credit default swaps. You know, people buying insurance for if the U.S. defaults on the debt ceiling, right? Like, yeah, it's mooning, but it, you know, again, it's not going to happen. But I'm just saying. All right, it's NASDAQ, you know, a little better. At least there's no bearish reversal candle. But I'm just right. You're not making higher highs yet. You're just not. I hope you do. I hope we do, man. Get it? I'm not being pessimistic. You hear me right now. I hope we go higher. I hope we go to 13K and beyond, to the moon. But no higher high. Just matching and rivaling the highs from beginning April, mid-April, and now May 1st. So, yeah, you're above 12,000. That's great, man. But you're not above the upthrust level where, and we talked about this just yesterday, where we know the inflection point from 2020. It's there, undeniable. Few different touches, the zone. But in June of last year, September of last year, and February of this year, market participants breached that level temporarily. And within a few days or just a day of being above the level, immediate rejection, and the price rolled over. Sellers took over. So you're in that area. So that can't be like low risk. Even if it did this time break out, it's still extremely high risk for fresh longs. That's crazy. But I hope it goes to 13K. With 10 minutes till your daily candle close. If you're enjoying the live stream, hit the like button, the bell, the sub as we just looking around. Okay, it's cool and all. I mean, but what I was discussing yesterday on stream was until you're taking out 180, man, I can't trust it. I get it. It's cool. You know, at the inflect, it's like spring back test of spring, kind of. I don't care because when you sprung and you kind of back tested the spring April 6th, you just confirmed distribution and rolled over. So it's hard trusting this market right now because you know why, right? Because the long-term downtrend has not reversed. Just because you go sideways for an entire effing year doesn't mean, oh, what prevailed before it was lower highs, lower lows. If that was what prevailed before it, that's just sideways. That's nothing. That's sideways consolidation and the long-term downtrend still intact. No higher highs. So hard trusting things in this market. I understand. And it's like, well, what's even the point? Like, why? You don't have to trust it because interest rates are so high. I mean, storing your money in a T-bond, a treasury bond is like not a bad idea. Institutions doing that more than equities. Yeah, smart money owns more treasury bonds right now than they do equities. Like there's like a scale, there's like a chart that shows it. Yeah, did you see what IBM reported earnings and they talking about 7,800 jobs? What was it? Posted it on my Instagram story. Yeah, IBM says it can replace over 7,500 current employees with AI. They're replacing some HR roles with AI. Oh, God. Is it the Google woke version? Oh, we're screwed. IBM also pausing hiring for roles that AI can do. So that's just... And also, what was the other thing? Okay, did you know that there have been 70 bankruptcies, large bankruptcies, meaning $50 million or more in liabilities, assets. And in 2020, the COVID crash, there were 71 total for the entire year. May 1st, man. It's May 1st. And the number one year for large bankruptcies was, 2009, and there were 118. So we could be going to bat against 2009 in terms of large bankruptcies if this trend continues. And it will. It will. Okay, so there are your index funds, man. Just look at gold real quick, knock it out. So here's gold at the 886, where it's a high risk area for longs. No one wants to be taking longs at 886s completed in W shapes. Stupid, high risk. But it's just paused. It's just going sideways, man. Same price it was at March 17th, May 1st. So still above 1963, 1928, the key levels from 2011 and 12. Still above them, right? So everything's fine. It's just, this is what happens after long runs. This rally off the November low. Gold went up. From the low to high, 26%, 177 days. So yeah, pause or reaction is in order here. What we know about W shapes. But who cares? Because the monthly is ungodly. It's crazy. Fundamentally, you get it. Record purchases from central banks of gold. And here's silver that had a scam wick kind of day. Went up to 25.92 before pulling back. And it's been, the new day's been open for a few hours now. Still above 24.84, but just in between two levels after a nice run. The monthly sets you free. Way higher prices given enough time based on the technicals. And there wasn't one technical development that was really bad on one of the metals. You wouldn't be that. mean, you know, platinum pulled back too today, but again, no technical like problems with it. Oh, where's my XPT? There's XPD, which one I'll look at, but what the? There it is. Yeah, so XPT, you know, just still broke the supply line, still above the inflection point. So you're still broken out, just not a good day. Okay. No problem. But like the problem is palladium. Look what's happened to palladium. $1,500 is a key level. Takes you back to 2020, the COVID crash, man. And then more price action, December 2021. There was in the peak from March 2019, peak from July 2019. That's the zone. You cannot argue. It's there. It's real. Price action correlates at that level the most. And so the issue is a successful bearish back test of what was once resistance, support has become resistance again. And so when that's going on, that's really bad. And like kind of hidden bearish divergence. I mean, so your next target on palladium could just be like 1264, you know, and after that, a long way down. I mean, could be going to 1100, but really maybe $900. This thing is, we'll see what happens. See what if there's any follow through on this one, this metal here. US oil. Okay, so the gap has officially been filled. You know, and you're right at this inflection point. Bearish. This is bearish, man. This is not bullish. Okay. You went up and you tested the 200-day simple moving average as resistance and rejected it. And now you're just flirting with this level. I'm telling you, below $75, $61, $60 eventually. Yeah, man. Not really good. Okay. You had your run. You had your fun in the sun after the COVID crash. It was ungodly. Ended with what? A bearish shark. A W. Oh, it was beautiful. And number go down. Lower highs, lower lows. Did you make a higher high on this gap up on the news catalyst of 500,000 barrels of oil cut by the Saudis? Nope. No higher highs. Same highs. Rolling over. Is the trend your friend? Nope. Trend is bearish. Trend is not bullish. So, not really. Natural gas, you know, I was like, hands off, man. It's so trash. No one wants natural gas. Smelt it, dealt it. It's like, oh, is it potential double bottom? I mean, like, possibly, but you know, you kind of almost engulfed yesterday. It was so bad you opened lower than the close on Friday. I mean, maybe it's a potential double bottom. Maybe we're identifying one low and then a second low and then kind of a rally off of it. But if you can't even go test the top again, it's done, man. Like, wow. May come back down to 216 here. Let's see how it continues to develop. Pretty dislike. Oh. No money out there to push natural gas up because it already had its fun, its run. All right, orange juice pulled back after hitting that 14145 extension. All right, now we're cooking. Is it finally a more significant pullback in store for orange juice futures? But you got some bearish divergence there. It looks like, and before it moons. But I'm just saying, right? I'm grasping at straws here. This is the grasp of straw. Look at it. That's a parabolic uptrend. That these never last. Okay, you think it's going to go on forever? This will end, and it will be violent. And just as quick as you went up, it might be quicker that you go down. So I'm saying, like, right, using that curve line tool for your parabola here, it's stupid. Stupid is as stupid does on the orange juice chart. I mean, it is virtually straight up now. I think it's straight up, like the angle. Something like that. I mean, that's ridiculous, man. That won't end well. But hey, it's great news, man. Great for Florida and oranges and juice. The real winners here, okay? Yeah, most commodities not really doing much today. Lumber had its lowest daily candle close since like May 6, 2020. So lumber's dead for now. Been dead. You know, after that scrub rally, look at this thing, down 3%. Gross, man. Poor lumber heading on down to $300. Look at this. See it? Gapped down. And then, here, I'm showing you. I was trying to remember, was it the actual day? Ended up being, yeah, the lowest close since May 6, 2020. Nice. Memory did not forsake me. Look at all that distribution. Look at just less market participants than before. And it's like a confirmed 3 falling peaks continuation, kind of. That's crazy. Okay. We have a new daily candle on Bitcoin and all of crypto. Let's go back to it. Lowest daily candle close on Bitcoin since April 24th. Really not a big deal, man. I mean, no damage has been done. No technical damage. The technical damage when you make a lower low than even your most local recent low from April 22nd. That would be like, okay, maybe we are going down to 25K, 23.8. But until then, it's just like, what if a pivot happens here? Just another higher low? Don't even play with me, man. Y'all doing okay? Everyone having a good Monday? I mean, you know, despite like maybe crypto pulling back, I mean, it happens, dude. It definitely happens. I mean, some of the altcoins that started like since Gensler and all this stuff, I mean, the liquidity's gone, off-ramping or on-ramping of liquidity in these markets. It's kind of killed a lot of the altcoin market. Like you can tell, like I can visibly tell what they've done on the charts. You can see these lesser than S coins. Like, oh, they're starting to like present really good, and then just dead. They're just flatline. No money is going into them, really. It's kind of bleeding out, and that's the thing, right? Just bleeding out, because why? Like, okay, if no one can access these coins anymore, not to the scale that they used to be able to just a few months ago, before all this, what's the point in even owning them? Yeah, it sucks, man. It makes swing trading like almost impossible. Oh, but we could go, you know, long on Pepe coin, chasing green candles and frogs. Yeah, you could do that. I guess that's the new meta. Ethereum. Lowest daily candle, wow, so this is a little more significant. Lowest daily candle close on Ethereum since April 3rd. It's been about a month. And did close below that heart line. It's a pretty beautiful channel. I mean, it really is. I love it the way it's anchored, right? 1 and 2 on the bottom, 1 on top, and then you got a second touch up here perfectly. So if all stays as is, right, at the lower high here, then, you know, your first target would be 1730 just based on history, and then if you couldn't hold that, then at least 1550 to test the demand line of this channel, which would be considered oversold in an uptrend. It's near the 200-day moving average right there. Can't really see it. It's there. And then BNB probably the strongest of the. I don't know, XRP only was down 1%, but with BNB, just still a valid engulfing candle. Nothing else can say that. No large crypto could be like, oh, this asset engulfed and is near breakout still. Bitcoin it's real breakouts, which is 31K. Bitcoin is like 10% off those levels. The big breakout on BNB, here it is. They're only about 6% off. So closer to the promised land than Bitcoin by 4%. But yeah, again, I've already talked about this where I'm not saying to go long because that's kind of crazy. To be longing at resistance, even after how weak you think the resistance has become, it's still extremely high risk for a long. And fundamentally stupid because you keep playing the numbers game where you keep going long at resistance. It's going to end really bad for you, man. So you just got to be mindful of that and know there could be max downside if things really do roll over, but they haven't yet. Okay. And then let's look at XRP, which is 1%, nothing. It's fine. No big deal, man. I mean, really, until XRP falls below 35 cents, it's fine. Because if it continues to sell off, and you give me a 40-cent back test, that'd be legendary. You may not do that, which would be even more bullish. But until you make a lower low than your previous discernible low on the daily, only accumulation, only higher lows. For 84 years, I get, but whatever. Okay. So I think we had like one request or something. Becoming tradition now. And Chris in Miami wants AG. Okay. Here's your quad screen. First Majestic Silver Corporation. Oh, nasty bearish engulfing candle today. I mean, nasty. It's not a good candle. Look, you concerns you could have. I mean, it's beautiful, right? 1 and 2, type 2, at supports. All these supports are higher than this low from 2016. I mean, but what makes it weaker, or like, so why is it like this 200-day moving average is constantly being rejected and just recently rejected? And you want to talk about an abandoned baby? This is an abandoned baby. Yeah, abandoned baby stuff right there. And that's a beautiful textbook reversal. Huh, right? The gap up and the gap down. Wow. Abandoned baby reversal, and now big bearish engulfing candle today. So you could be headed lower. I mean, you'd probably be headed to what, like 664 to 630, but I don't think you want to fall below that. Because like what could be really cool is, okay, 650 is formally back tested as support for the first time, and it's a spring back test of spring. All right. So you can't be surprised if AG sees another 6% downside, 6 to 7% downside for a formal test of the July of last year low and September of last year low. Maybe if you hold that, that could be, we would want to see bids come in there. All right. But just wouldn't say expect anything ever, but almost expect just to, you know, mentally prepare yourself for 6% downside for a test at that level. Seems like that's very possible here. So, but yeah, I mean, my God, what a freaking perfect harmonic. It broke the supply line, put the type 2 return in, but it's like, when high or low, when local high or low. You need that. You haven't done it yet. So weekly, I mean, bullish divergence on the weekly and no follow through, right? Look at that crazy bullish divergence on the weekly on both oscillators, like seller exhaustion on the weekly, type 2 return, discernible on the weekly, but no follow through yet. But that could be just testament to the lack of liquidity in the global markets. I mean, everywhere. All right, they're trying to pull as much money out of this market as possible. We got to get way more people unemployed. We got to kill inflation somehow by making people really poor. So limited liquidity out there, even more than before. It's just tough. It's like, yeah, technically it's sound technical argument on a significant time scale, but when bids, I don't know, like maybe never. Okay, that was that one. And then we could look at Lind, which is an S coin that, again, we're gonna perform about as one would expect. Yep, that's how it goes, man. I mean, this is an asset that hits like just not as an 886, but a 94% retrace from the all-time low from October 2020, puts in one bottom, then the second bottom. Okay, then rallies and does what? Just runs up and tests a key inflection point from 2020 as resistance again, and is rolling over. 2 weeks ago, bearish engulfing candle, falling through, on the weekly could very well be headed to 59.30. Very well. Why not? It's like that high from October of 2020. Like these highs, both of them are lower than this high. That's garbage. Trash performance. Like your trend is not reversed. It's still down. It's still in a downtrend right now. And during the consolidation phase, it's the same lows. And after the same lows, now lower highs. Not really what you're looking for. Right? This is what I'm talking about. Like, look at this high. November and then of last year and then February twice. And then now look at these highs. These two local highs are lower than the highs before it. Now you're below the 200-day simple moving average. In fact, you're regarding the 200-day simple moving average as resistance now and following through below it. Lowest daily candle close just moments ago since March 11th. I mean, this could be headed down to 59.30 as discussed already. That's where we are. Not oversold. Oh, not oversold, man. So there could definitely be more downside. What's the downside potential from here? Yeah, see, you got about 14% downside before you see the next, like, maybe key ice line. It's been testing this local high from December 5th. It already did it once. It's already done it twice, and no one's really bought. There's like 3 bids, and no one's really following through. So it's just coming back down to it. It's like that'll break 14% downside. Yeah, crazy. This is about this is downtrend stuff, though, right? I mean, like, hey, harmonics present themselves, and then they rally off of those lows, and it's beautiful. Oh my God! And then just time goes by, and then just a lower high than this high, than this high, than this high, than that high, than that high. So you're just, the bullish patterns, the bullish indicators, they were somewhat reliable, but their performance was terrible. Yet that's kind of like how it is. That's kind of how performance is in bear trends, right? If anything bullish presents itself, it might play out, it might be reliable, but its performance might do terrible because you're looking for bullish patterns and bullish trends, bearish patterns and bearish trends. Okay. So that's your Lin, 14% downside. If some doesn't pick up soon, man. And I have the least amount of faith in altcoins than I've had maybe ever, because the fundamental shift with Gensler going to war on them. And I could tell, because I look at this stuff every day, that the liquidity has just gone, and they're bleeding out, all of them, ever since all that stuff happened in the past 2 months. Something's changed in the low tier, lesser than S-coin market. Yep. We've been live now, hour and 3 minutes. If you're enjoying the live stream, like button, bell, sub. Thanks for being here. Okay, man, we covered a lot today. A lot of stuff going on, man. Kind of blacked out. Hey, Brad. What I think would be a good idea, just reach out directly to Chaylin and tell him. And we'll see how we can get that going. Yeah, it's just like, why don't we get depressed when we could look at NVIDIA, which is like, NVIDIA just, no one's stopping NVIDIA, man. It is the king of kings. Not even kidding. Highest daily candle close on NVIDIA since January 4th of 2022. Taken out, I mean, you're just actually rivaling the high from March 31st, but technically closed above where it closed that day. That was an abandoned baby of abandoned babies. Oh my God, look at the education on this. Wow, look at that. That is gorgeous, right? The gap up and gap down, and then confirmed on the 1st with the follow through, or on March 31st with the follow through. Wow, education. Anyway, I mean, there's not much to look at besides, hey, it was range bound and broke out, broke the little range. It's almost like Bitcoin, dude. It literally kind of. This is what's just sad, because you see it What you got going here? It's not Bitcoin, it's Nvidia. Like where you have like kind of like you've got a low here, or you could even have it like that. I mean, that's so similar to what Bitcoin it has going on right now. Like if you adjust for on Bitcoin, it is like that. It's just crazy. Like Nvidia and then Bitcoin, no. Like if you just adjust it and it's like, okay, so two ascending, broadening wedges. But clearly different performance. Yeah, so no bids on Bitcoin yet, really. But man, Nvidia and Bitcoin. Similar structural developments, you know, consolidation phases after impulses up. All right. Let's look at Apple because they're reporting, and Apple closing right, mother of God, like that 88% retrace again. It closed it down 0.05%. This is like the high, even if it goes higher on earnings, okay? And it could, you hear me? It could just, the casino, Apple, Moon, just gaps up 10% from where it is, you know, okay, the market saved, money printer go burr, bullcrap market, okay. But you know that Apple has the least amount of cash reserves that they've had since 2014. And Amazon, I mean, they're, they have like some of the lowest growth they've seen. What was it? What was the stat on Amazon again? It was, dang, I don't have it. I thought I'd posted it earlier. Maybe it did. Gotta find that, all right. Yeah, okay, so Amazon, okay, clear fundamental shift last couple of years. They were highly profitable, right? Hitting a peak profitability in 2019, and that has crashed. And so they're experiencing major free cash flow losses to a degree that they've never seen before, even with top line growth being good. Yeah, well, I mean, like, you know, there's evidence of like ceilings getting, and I think Amazon has like a crazy PE, like 110, which is absurdly unreasonable, too high, overvalued. And Apple, similar. I mean, my God, this is it, man. I don't know how you could ignore this and be like, oh, this is the driver of drivers of the market. Whatever Apple does, the S&P, they're gonna go that way. Even with things getting bad on other ones, Apple's gonna drive. So if this is an 886 and it's rallied off that low nonstop, 37% in 122 days, and now you're showing buyer exhaustion at the 886, how can you trust this market, man? It's so hard to trust the market. When you look at individual assets, and speaking of Amazon, you go to it, and you look, it's like, no, dude, this is not good. Like, you are testing this level, man. Is that an 886? Probably. 7868, yeah, pretty 87% retrace from that high to low. No, that was an 886. It was a literal 886 tested on this little rally here from this February high to low. And now you're testing death. Look where you closed the day below the August 2018 high. Today. Now you're above the pre-COVID crash high. I'm sorry. Was that? No, you're above the July 2019 high. But barely. It's like the IWM kind of. But that's how close you are to a massive markdown. I mean, this is a support of all support. Look. You can't tell me this is good. This is very bad. The 200-day simple moving average being rejected not once in February, but once again last month, this month. Right, this is just reality. I'm not trying to like scare people or make people feel bad, but this is not like bullish market price action. This doesn't happen in bull trends. You don't reject 200s and regard them as resistance, and you make 88% retraces, and you from your local high or your previous discernible high, and then you roll over from there. You just don't do that. Even if it holds here and we rally, let's pay attention to the level because it's kind of broken down, but not quite. It's like in the zone, in the dead middle of it, very tight zone. But we know breaking it, severe consequence in another market driver where the Qs dump, all of it, right? Think about Apple and Amazon selling off together. Ooh, good luck S&P, bye-bye. You're not going to higher highs. You're going to top out now if these roll over. So pray for Apple on earnings, I guess, because it didn't work out for Amazon's earnings at all. It went up. And it even, oh my God, it's so bad, dude. Like, look, just locally from March to now, the daily, just bearish divergence. Buyers are exhausted in a long, well-established downtrend. Yikes. I wouldn't ignore that, right? If the trend's bearish and there's bearish divergence and you've made a deep 886 from your previous idle, good luck. I hope all this goes, I hope it just goes to $200, right? You know, but that's Rudy Poo jokes. The data's just bad stuff, just bearish stuff, like the congregation of multiple bearish variables, and the trend is long-term bearish, so therefore could be very reliable. And if it is reliable, it could very well outperform, meaning a lot of downside if this actually plays out. Okay. Oh, wow, man, I'm going. Okay, we can look at Microsoft too, that had been killing it, right? Because of, and still is, you know, had a wedge and broke upward, but kind of stalling out now. And you're not taking out 314, 318 yet. So, you know, of them, this is probably, you know, one of your best ones, this and Apple. What a deep retrace so far. I mean, what, it's 74% retrace from the all-time high to low. It's pretty good. But now you're starting to get into those deep retrace levels. And this is where you are. All right, this is where Microsoft is. It's at this high from 2021, August 2021. You're just right at it. So if it doesn't hold, then you could be headed down to 281. Because up, down, up, down, up, down, up, down. That's about it. So there's a gap fill. You know, I don't know if this is a breakaway gap. It could be. It's pretty sizable gap and good, decent volume on the gap. And Google's okay, but super like complacent. Like why can buyers just not break 107? I mean, the TA has been respected in terms of the Fibonacci TA, right? Where all it is anchoring from your all-time high to your lowest low in November. Okay, when a bottom gets put in, a common retrace between a 38% and 61.8% retrace occurs. That's happened. It occurred the date of April 6th. So TA respected it in that way. And if things are super bearish, the asset would only get to the 38% retrace before rolling over to and resuming the trend that was established last year, which is down, bearish trend. So of course it could continue up, but my God, you're showing some bearish divergence here too. It's rivaling the high from early February, and you're just right at this high from February 2021. So right, I mean, that's where we are. If it rolled over tomorrow, okay. It's already done its common retrace. 38%, man. That's good enough. If things are really bearish, it's done. If it's okay, then you continue to maybe, if you're lucky, get to 117. But these, again, liquidity is so bad. Just look at one of your largest market cap stocks in the world, just can't catch a bid, man. I hear moaning. I don't like the moaning, dude. The saxophone? Yeah, it's okay, whatever. All right, so those are the big, that's the, you know, the big coins or the big stocks, man. The market drivers. Oh God, there's some though that are just, they lose and they only lose, man, okay? Like Workhorse, we're waiting on 81 cents. So, well, you're 89 cents. Bearish engulfing candle. Lowest daily candle close on Workhorse since May 7th of 2019. Utter destruction, man. Just collapse. GPS also getting, like, this is not good. I mean, it's doing all the things that you would dream of for a reversal, but who knows how long it would take. You know, it took Weight Watchers forever down at its ice line to really reverse, and it didn't last that long. But look, 2008 low, you know what you did? You fell below it today, down 5%. And a bearish engulfing candle to boot. I mean, it's pretty ugly down here. I don't know how much we want to be messing with stuff like that. It's bad. Etsy, terrible, man. I think it broke that demand line. Look what's happening. Talking about the 200. Look at this price action. Double topping the confirmation high at the 200. The lowest daily candle close on Etsy since November 9th. So the lowest candle close of 2023. And there's just not much here. We headed back down to 73.50 again. Really not gonna be that weird. The long-term downtrend's still there. Even if it's a massive M shape, okay, well then, look, these big M shapes, I'm trying to think here. Was it TCS? No, it wasn't TCS. Container Store, was it? It was. The TCS, we had been waiting for like 5 months to see an 886 be achieved at the ice line. It was very nice. It was like, whoa, man, we got an 886, completion of the big bat pattern, and it's an ice line. Are you kidding me? And then look what happened. Virtual capitulation, right? That's capitulation, right? The levies break where there should be limit buys. There are none. That's collapse, okay? Collapse, capitulation, the date of March 14th. And all that happened since the formal bearish breakdown was the back test. Look, it was formally tested as resistance March 21st, April 11th, and then April 12th. And look at it now, lowest daily candle close on the Container Store since like June 25th, 2020. And you are below the levels you want to be above. My God. You got to wonder how many more in like the same category, these e-commerce kind of service companies. I mean, this is a cool store. I didn't even know about it until I moved here. And they have all this cool stuff for like organization and storage and all that. You check it out. Great website for that stuff. But I just don't know how it's going to fare in a bear market, you know, and a similar category, we're looking at Etsy, Container Store, and here is Stitch Fix. Near its all-time lows, heading on down. Look, only sell, only asks. No one wants to own Stitch Fix. Stitch Fix, they do like their service, right? Where like, hey, I like X. So, all right, every month they send you a box full of X, something related to X. And what you like, you can buy. And what you don't like, you can send back. That's this company, Stitch Fix, right? So 200-day simple moving average. Oh, this is like a trend. This is like a theme, isn't it? Failure, failure, one high, the second high rollover. Confirmed, less market participants. Confirmed, we're screwed. Yeah, and that just could go on and on, man. A lot of that. So anyway, man, I don't know, QQQ, let's look at that real quick and we'll wrap it up. I'll leave y'all to it. Look, the Qs, man, you got this right angle descending broadening formation, just skating on up that supply line. But here's the thing, right? From the August high to the lowest low in October, you are nearing an 88% retrace. You know what you did? I mean, you know, on Friday, you made your highest daily candle close since August of last year, highest close of the year. But deep value perceived areas for shorts in a downtrend. I mean, this is where you go. This is where assets can go before they roll over. Apple's a great example. Apple's like a specimen example of 886s. Every single time it runs to an 886 over 100 days plus, and then actually reverses there for real. And the QQQ is nearing that. 325 is the 886. So have your alert set up on the Qs, because if you hear that, you know what fib node's being achieved, and it's the deepest value perceived area for shorts in long established downtrends. Okay. So and really, unfortunately, like the structure is a horizontal line support and an upsloping resistance, right angled, ascending, broadening formation. Those are inherently bearish. But we'll see. I hope it breaks it. I hope we go to $500 and everything's good, man. And hype's on and money printer go burr and we're back to 2020, 2021 vibes. I hope so, man. But that's hope. That's not reality at all. So remember, it's the first of the month, so it's the best time to join the Patreon, trade setups, education, access to the premium Discord, and above all, supporting this channel that is 100% crowdsourced. I've never accepted a sponsorship from anyone ever. I've never taken money to promote a product to you. So that preserves my integrity, so there can be no doubt, right? Don't monetize these live streams. In fact, I play copyright music. So since I play copyright music, I'll never even be eligible for the YouTube subscribership, right? Like, you know, members, I can't ever do that because I play copyright music. So many streams now. So can't monetize these streams. So it's all you, literally. So that's why it's like Patreon, Citadel, or tips, or merchandise, or NFTs. The only way. All right. So let's go back to Bitcoin, wrap it up. And again, I mean, here it is. It's consolidating. It's been consolidating since mid-March. A local lower high got put in, but no lower lows yet. No breach of the structure. So unfortunately, it's bitter. It's like just kind of bitter that we're below 28.8, the level of all levels. We know how important that is. But you're not dead yet. All right. So, I mean, thanks for the 3 contributions today. Go the Unwise, Chris in Miami, and Cash Out. Thank y'all for supporting the channel. And I will just be back. So, until next time, respect the TA.
Myself, and I know this sounds weird.